Hello, everybody, and welcome back to another video from the Investor Diary. In this video, this video is a continuation of the first idea that we started 2 weeks ago, which is the importance of trading philosophy or developing a trading philosophy. And last week, we started with trying to understand cause and effect as one of the factors that I'm studying in developing this trading philosophy. Cause and effect, we translated that into that these indicators are the effect of the price. They do not affect the price. So these are a result. We said that they are a repackage of what is happening to the price. Um, this is the weekly time frame, and this is the 4 hour time frame. So, what I have been studying during the last week are these indicators. I've been playing with a simple playbook on this daily, weekly, daily stochastic. This is only for informational reasons. It is not within the playbook, and the 4 hour RSI, as well as this indicator, which is the moving average conversion. And the 4 hour stochastic is only for informational reasons as well. So those two, the the RSI, on whether it is daily or weekly, because this section is daily or weekly and this section is the 4 hour. um, why this section is the 4 hour? One of the main reasons is that I am planning, and this is part of my experiment, I am planning on only looking at the charts once a day, and it will be around this time. So this 4 hour gap, or this 4 hour period, is the time, is the area or the range within which I will be working on the charts. Okay, so I only looked at this part as if I am looking at the charts at this time. And I went back from January 1st of January 25 until around the 25th of December 2025. Let me show you what happened. I went through the Euro USD, GBP USD, USD GPY, the USD CHF, and the USD CAD in details, and then I went into the AUD USD and the NZD USD, but they were not in detail. I will show you now the results. So those are the results of the daily. Let me first tell you what I have been doing. Let's put this on the daily. The playbook is very simple. So when this is above the 82 or within that higher band, if the crossing of the K to the D happened above or in an area near the top, I would take a sell. And similarly, if the cross of the K to the D upward below the 32, this is a 32 band, I would buy. And the other rule is I will only buy if, let's put this here, if the RSI, I will buy if the RSI is above the 50 and above its moving average. And this has to be green. Similarly, or opposite to that, if I'm selling, that means the RSI needs to be below 50, below its moving average, and this indicator needs to be in the red. So those were the rules. And what happened, I went through, as I said, Euro USD, GBP USD, USD GPY, USD CHF in detail. So those here are the details of those. And the USD CAD as well. But then the AUD USD, NZD USD, because that was just putting these numbers were taking a lot of time, and I decided that I will just run those two without logging in their information. I would just log in the totals. Here we will have the daily P&L, profit or loss total of all, the annual rate of return, and the total, the balance, and the win loss ratio. Okay, for all the trades. If we look at the total trades of those initial five, we will see that we had 114 trades. 114 trades, meaning, just a minute, let's get the calculator. Okay, so 140, I already did that. 114 divided by 5. So they were so around 23, around 22, 23 trades per pair. So those were five. One, two, three, four, five. And as I said, the AUD USD and the NZD USD were not here. Now, the scary part was that within the first 6 months, look at this red, I was in the minus in this experiment. Okay. Until this is until April, 22nd of April. So we moved to the green. We just had a very small green here on the balance. This is, and then we went back to the minus. But let's consider this as a zero, okay? And this is the daily. I will show you the weekly now, what I did. And then the whole daily experiment started really from gaining. I mean, it started gaining mid June, after mid June. And this is the scary part. So all of these 6 months were as if I did nothing. All these trades, they amounted to zero balance. I mean, not zero balance, zero effect. The balance stayed as is. So all these ups and downs, all these wins and losses, at the end, the balance is not the total balance, not the capital. The capital stayed, meaning the capital stayed the same without any change, minus 50 cents. Okay, and all the profits started coming in after that, and even the last batch were all losses. Okay, which amounted to this. So the total amount is this on the daily. Let's go back and see what we did with the weekly. So with the weekly, and as I said, of course, at 6 a.m. trading view time, okay, I would run the recording, the replay. I would run it. I would play it until it reached the next 6 a.m. and I will see what happens, as if I am trading only on that time. Now, the next thing is the weekly. No, not this one. This is the 4 hour. This is the weekly. So the weekly, I would look at the stochastic. That's just the stochastic. And the idea is once both the K and the D cross the 32 band, I would buy, and then I would sell when they go back here. Okay, that's the idea. Now, let's see the effect. And I wasn't looking at any other indicators. There were no other rules, just the weekly stochastic, and the result was very strange. So the daily got us one. Let's talk about percentages better. 14%, 14.8, about 15%. But the weekly got us 39, about 40% annual. The total is 54, but imagine, look at this. And if we're trying to develop philosophy, a trading philosophy, this has a great weight and great meaning. And we will look at that meaning now. The win-loss ratio, and the win-loss ratio only on the daily experiment, not the weekly, is about 9 to 10. So it's very similar. 54 wins to 60 losses. Okay, but that means the RRR is not bad at all, actually. Okay, and let's turn those tones. We hear a lot about stop loss, the importance of a stop loss, and the importance of RRR. Okay, and the RRR is a formula based on where did I put uh, the stop loss and where is my take profit, and the RRR happens. The formula happens because of that. But what I'm doing, I'm not using a stop loss. The stop loss is based on the indicator itself, whether it is on the weekly, on the daily. The way I go out of the daily is when it crosses back, even if it crosses at the, for example, let's take this one. If it was here, and I would start taking the buy. Let's look at the 4 hour. I would start thinking about taking the buy here. Okay, and I would look at the RSI, the 4 hour RSI. If we look here, why isn't it appearing? Yes, okay. So if we look at this point here, look at the 4 hour, look at the RSI, I wouldn't take it there. So I would be moving until this point. So this is the point where I will buy. I will wait until the RSI is above its MA, above its above the 50, and this needs to be green. So I would be taking the trade on the daily at this point, and it needs to be at 6 o'clock a.m. as well. So not yet. Let's go back here. So we're still below. So this is the candle where I will take. This is the time. No, it's not. It's 1 o'clock. Still 1 o'clock. So at this five, no, because of the time change, now the 6 o'clock becomes 5 o'clock a.m. So this is still the RSI is below. So on the next day, we will go to the next day. And where is the next day? This is the next day. This is the candle where I will take the buy. Okay. Is it? There's something wrong actually. Let's look here. And then yes, this is it. Okay. This is where I will take the buy. The RSI is above 50, above its MA, and this indicator is in the green. And I will take it until it moves back. So this is where it moved back here. Okay. Anyway, the important thing are the results. And if we look at these pair results, we see that on the daily experiment, the GBP USD made the best return at 7%, then the Euro USD. Both the GPY and the CHF were a loss. And then the Canadian, the New Zealand, the NZD USD, and then the AUD USD. Now let's go to the weekly, where the Euro USD was the best, and then those are kind of similar. So the weight, now if we look at the weight of the weekly, what does that mean? In investment, there was an experiment saying if we traded, the difference between trading and investment, if we buy and hold, talking about stocks, if we buy and hold, the experiment said it is much better than trying to time the market and try to sell the tops and buy the bottoms. And the experiment was very, very obvious that buying and holding is much better than trying to time the market. Okay. And actually, this is an evidence to that. Taking this, and I will show you another thing that would also support this idea. Let me see if I can bring it. Yes, this point here. Where is it here? This is the daily. No, we want it on the weekly. Okay. Look at this move here. This move. If I am at 6 o'clock a.m., look at the time, that means I will take the candle here. This is where the area that I will take the buy. So I will take this candle because it's at 6 o'clock. That means it is this candle here. Okay. And at the beginning, I will be totally frightened because I will be catching the downtrend. Okay. So I caught the downtrend and then it kept on moving all this. Now I will be waiting until it moves up in this direction. But what it moves down, what will happen? That means if it crosses in the middle, I need to, and I didn't have an exact playbook for this one, whether to wait until it goes out of the range, or shall I go out just in with if it made the cross in the middle. I didn't have a quite rule on that. But anyway, this is scary. Why? Because on the 4 hour, this is near. I mean, I could lose this trade if I waited more. Anyway, so, but in general, that means relying on indicators alone, yes, it will bring good performance. This showed quite a scary look here that in 6 months we did nothing, absolutely nothing. And the maximum drawdown was about $85, which is 8.5% of the capital. So this is the experiment now. Next, I will not continue with the experiment on the replay. What I will do now, I will move this experiment to the demo account. I want to see what will happen in real life, how I will manage this playbook in real life on a demo. And then I will move to experimenting something different, which is adding, let me show you. Yeah, this is the weekly, this is the daily. I want to move to the beginning of the year. Okay, I want to see what will happen if I add the elements of market structure and SMC to the model. This is the experiment that I have done and it failed, but I'm still studying what went wrong, because I did something wrong. Actually, I didn't go through the playbook right in terms of the stochastic, how I got into the trade in the first place. Um, because I look where I entered. This is where I entered the play. I entered the play here, which means I thought I would be catching it going down because I had a bottom here and I thought it will break it and move down, which was a wrong playbook kind of thing. So this is what I will be doing next week. I will be moving to the demo on the indicators, which are the effect, and I will move to understanding causes and effects together next starting Monday. But this will happen on the replay and that will be on the demo. Thank you very much, and I will see you next week.